Hi, I'm Amy Rose with Good Jobs First. We are a national nonprofit research group focused on economic development. And today I'm going to be giving a brief tutorial on how to use our new and improved tax break tracker. So let me share my screen. Here we go. So to get to tax break tracker, start by going to the Good Jobs First homepage at goodjobsfirst.org. and scroll down to the tax break tracker box here. And this will take you to our tax break tracker database. Tax break tracker is a database revealing how much state and local revenues are lost to economic development tax breaks. This data is made possible by a new accounting rule called GASB 77, which stands for the Governmental Accounting Standards Board Statement number 77, which requires state and local governments to include a note in their annual financial statements with information on revenues lost to economic development tax breaks. This information is important because governments rely heavily on a diverse stream of taxes to raise revenue. So when governments give big tax breaks or abatements to corporations, they hurt local communities who rely on that revenue for things like schools and roads. Tax break tracker includes tax abatement disclosure information for all 50 states plus DC and the 5 most populous cities, counties, and school districts within each state. Inside, you'll find information for select jurisdictions going back to the year 2016 in some cases. We don't collect information for every government jurisdiction. So if you don't see data for a jurisdiction, reach out to us and we can help you track that down. But this is a great place to start. So let's get started on how you might use this data. You could start by leaving all selections at the bottom here blank and just click on the state summary button here. This will give you a summary overview of all of the data for all the states we have information for. And so you could filter by state here at the top, or you could just leave it as is, which will show you all years, all data for all states. And so you can see here, we have the state name. In the second column, we have the total revenue loss reported by the state, the total revenue loss reported by localities within the state, and the number of reporting localities we currently have records for, and the total revenue loss tabulated so far for the state and its jurisdictions. If you scroll down to the bottom of the page here, you can see that all states, all years, all data includes almost $97 billion in tax revenue lost to economic development tax breaks. And to be clear, this is just some of the revenue governments abate for economic development. Not captured in tax break tracker are items like entitlement tax breaks, some sales tax diversions, discounted land and infrastructure, and all the tax abatements governments fail to report, meaning a lack of compliance with GASB 77. Okay, so another way you might use this database is to look for a specific jurisdiction. So let's say I want to look up Nashville, Tennessee. I would select Tennessee from the state drop-down box, and you could just hit search, and this will show you all of the jurisdictions within Tennessee here that we have data for. So I'm going to select the city of Nashville, which is actually a hybrid government joined with the Davidson County, and hit search. And this is going to show me all the data we have for Nashville, Tennessee. So from here, you can see we have data for 2017 through 2021. And from here, we can see the program name, the program type, and the gross revenue loss. So to get more details, I'm going to click on the program name, which here it's a pilot program. And this will take me to the individual entry page for that program. And this includes the state name, the affected jurisdiction, the jurisdiction type, the fiscal year that the data was reported for, the program name. Again, this is a pilot program. The purpose of the program, statutory authority, the abating jurisdiction, applicable taxes, the method of abatement, any provisions for recapture. So this would be if the company did not fulfill its obligations, how the government might get their money back. The gross revenue loss, the reimbursements if there are any, the net revenue loss, which is the gross revenue minus reimbursements, the type of loss, which could be active or passive. So in this case, it's active, meaning that the jurisdiction being affected is the jurisdiction who made the abating decision. A passive loss means the jurisdiction impacted by the tax break was not the one who entered into the agreement. They are passively losing due to actions by another jurisdiction. So school districts are typically passive losers because cities and counties have the power to abate school district revenue. And then we have any additional notes. So we have a note here saying to look at the financial document to get some company-specific details, and then a link to the actual financial document so I could look at it myself. And so again, this information is available for every tax abatement program that we have data for. And you could also check out our user guide here at the top of the page for more information about how to use this tracker. And we have a GASB 77 primer and FAQ. So I hope this video was helpful for you, and feel free to reach out to us at Good Jobs First if you have any questions, and happy data hunting.